So from first 60 years after independence, we reached $1 trillion. And we are talking about that from next 25 years, which is Amrit Khan, we'll achieve $27 trillion. So the numbers are heavy and results and benefits should also be in that direction only. So I would say sit back, have patience, have discipline, have time on your hand, involve with financial consultant, and let's enjoy the journey. A main destination that we're looking forward to.
Welcome to our show, Mr. Singh. It's a pleasure to see you today with MoneyTree Partners. So, for audience and the viewers who are listening to our show today, there are a few questions which I would like to pose, and we have an expert from the industry, Mr. Singh, who will be representing, who's at such a high position with Mahindra Manulife. Let's see how does he address to those questions which the investors are looking forward, and I'm sure you investors would be enjoying the show till the last. Let's see and how Mr. Singh answers those questions. So Mr. Singh, first of all, welcome to the show. So we have certain questions which which viewers and as an advisor, which the questions generally come in front of me. So rather than me today answering to my viewers, it's better that we as the industry veteran, let's see how you answer those questions, and it will be a pleasure that you give answers to those questions. So, sir, first questions would be that you have seen that Indian markets are running and it's having a bear run, and everybody is seeing Indian markets growing to a great extent. So, what is your view over this? Why do you think that Indian markets today are performing to this level?
So, first of all, thank you for inviting me for this show. It is my pleasure to come here and take some of the queries that you will be putting to me. Just to give you a background, I've been in the markets for about 30 years now, in various forms, including from a distribution as advisor, and now in the manufacturing side, representing the mutual fund manufacturing part of it, the AMC. So what I can tell you in brief is this, that nothing happens without a reason. So if the markets, the equity markets are performing, they are performing because of the growth that economy is showing. And just remember one thing, that when the economy performs, it is a constituent of corporates, whether in services, whether in manufacturing, doing well, and the consumer ultimately, whom these corporates cater to, their income and their expenditure doing well. So as I talk to you, there are certain milestones, just to talk about one or two which we achieved as a country in the recent past. For example, the last year, we became the 5th largest economy of the world. Right? So we crossed a milestone, and these numbers ultimately will be very small many years later. For example, as I talk to you, we approximately about $2,500 per capita income.
Correct.
So about 20 years back, the numbers looked like $500 per capita income.
Yeah.
So yes, we are the largest populated country of the world. We would like this number to grow much faster, but there are certain things that we'll take into consideration, that a large population, about 140 crores, and that we are growing now. It will be a little slow growth now, but the compounding will catch up and the number will grow faster. So last 1 year, the number delivered by the markets are the numbers delivered by the corporates only. So after a long time, we're seeing a corporate profitability growth, which are being reflected in the various indices depending on large, mid, small cap. Yes, I acknowledge that the mid, small cap has done much better. So maybe it's a different topic to discuss with if you want to put a question on that. But net, this is not a by chance movement. This is backed by fundamentals. This is backed by many other things, which we'll talk over in the next few questions, if you put to these.
So very beautifully, Mr. Singh has discussed about how India has been and what are the reasons because of which the India is performing to this level. He has discussed about that today we have reached the 5th level, and how the corporate profitability across different sectors has been an important reason because of which different categories has been performing and why Indian markets are performing. So one thing is for sure, after listening to Mr. Singh's answer, that this is not happening by chance. This is primarily being taken care because of the strong fundamentals which this economy holds, and most importantly, the strong conviction which a lot of investors today have over India as a bright spot. So moving to the next question, Mr. Singh, I really want to ask you, which not only me, I think the entire world is looking forward. How do you see the general election, which is just around the corner, approximately 1.5 months? In fact, today we have the the exit polls result has come up, and I think most importantly, the election commission has also come out with the date for the elections. So, how do you see the general election, where India is the biggest democratic country in the world, to come, and how do you think the markets would be performing because of it?
To be very frank, very difficult question to answer because this is the event-based question, right? So, but I acknowledge it's a relevant question in the context of for a country. So, being the largest democracy in the world, it's a large event which will happen in next few months. As you said, dates are out. So, in economic terms and related to markets, what I'll say is, I just hope there is no disruption in expectation of the result and the result itself. And what I say stands true for anything. So even if a corporate result comes out,
yeah.
So there's expectation to the result, whether it's quarterly, annually, profitability, and the result actually. So maybe I think there is some expectation built in, and you pointed out to the exit poll. I'm sure after the exit poll there will be more expectation built in. So in the way we see the markets, we think that as long as policy decisions are good to take the country forward at the pace that the market expect, whoever forms the government, markets will take it in stride. I acknowledge to the part that in past there has been anecdotes and by some experience when the results have been against expectation, there have been market movement up and down both.
Yeah.
And maybe not talking too much about it because this is actually maybe sentiments are involved in this question. I'll just take you back not very far back into time, but I'll take you back into the first week of December when few states went into elections, and there are a lot of people who were expecting a result, and the result which came out was maybe against that expectation. And next few days, markets went up, and was up for next few days. Right? So those kind of things happen. But what I'll say is, have patience, be a long-term investor. All this will look like past small events in the long journey of our country.
Oh, so Mr. Singh has answered this question in a very beautiful, in a very tactical manner as well, where he has shown us that, how why elections are so important, continuity in the policy is important, which gives a strong confidence for the FDIs and FIIs to come and invest their money in India. And probably, when the election, sometimes the results goes out of order, how the markets react. But, these are very, very small things in a longer run, probably a microscopic event. However, this still is a big charcha these days that, how elections will turn up and how the markets will be. Well, anyways, Mr. Singh, let's move to the third very, very important question which I have for you. And this question is important not only for India as a country, but I suppose it's a global thing which is coming out. Sir, how do you see the US quantitative easing and the interest rates cut, where the US Fed and the US government, the European Council and India, everybody is looking forward. How do you see these important events to come up? Because this world has been seeing just a rate hike, and for last many days we have been seeing. But now, how do you see this new church of quantitative easing and the interest rate cuts to happen, and what is the major trigger behind that?
So there's a long background, but to put it very in few words, the post-Lehman crisis, this is about 15 years back, post-Lehman crisis, world went into quantitative easing, and cutting interest rates. So the main reason being that the growth should not hamper, unemployment should not go up, and the country's people's welfare should be taken care of. So rarely this happened. The quantitative easing went into a situation where for more than a decade, due to Lehman crisis and later because of COVID crisis, lot of, as I say, money was printed and infused into the economics to help stabilize the economy. And there was a collateral damage in the last 2-3 years where the inflation went up.
Correct.
Went up beyond expectation, went up beyond acceptable numbers of the central bankers.
Correct.
Now, to some extent, we can say that the objective of the bankers, central bankers, the governments have been met, and the reversal of that 10-12 years have to take place. So you would be hearing many words like hard landing, soft landing. We get all these adjectives around.
Correct.
But let me tell you still that interest rate being high, and especially USA, which is the largest economy of the world, which is the largest consumer of the world, matters, because if interest rate stays high, inflation stays high, then consumer discretionary spends, the consumption spends may tend to come down. If people have to pay more for EMIs, the discretionary spend may come down.
Yeah.
So I think there may have been many variables, including outlier event like COVID, but in the end, there's expectation that interest rate somewhere in the second half of this year, in calendar year, Fed will look at cutting interest rate. So it is an important trigger for every economy in the world, because if interest rate comes down, cost of funding comes down, more money in hands of consumer, and the FDI, you refer to FDI as an FI, so FI flows become then important, including to a country like India where growth is happening.
Yeah.
So maybe some of that money may flow to us.
Correct.
So they are linked even. I would say, only difficult question is when they will start the rate cut. So we are hearing everything in the market. So I'm not an economist I wouldn't like to put a date, but somewhere down in this calendar year, maybe second half of the calendar year, interest rate cut can be expected.
Correct.
And this will only be positive. This should not be negative. If it is deferred, then maybe some of that flow, some of the positivity will get deferred. Only thing that deference may happen, but ultimately interest rate will be cut somewhere when the central bankers are comfortable, and it will ease some of the problems, some of these in hands of investors, as well as profitability of the corporates.
So I think viewers, Mr. Singh has answered this question where he has told us about the Lehman crisis, he has told about the discretionary consumption increasing in the hands of investors once the rate cuts happen. Though he is not sure, but on a very tactical note, he said that second half of the year would be seeing the interest rate cuts. But however, he has told the entire consequence of how the interest rate cut would appear to the consumers, to the investors, to the people at large, and I think most importantly to the viewers who are watching our show today. So great going, Mr. Singh. I mean, I would like to bring a very, very important question, which I think not only me but all the viewers are very much interested in, and the question would be that of late, I mean, in the next 3 to 4 cycles, we are seeing that Indian markets are seeing a little jittery phase. You have been hearing about the SEBI chief, which says that small caps are busting and the SME space has some problems. So as such, because of it, the market is seeing correction, and a lot of investors are jittery about that. Is it a panic? Is it a bubble which is getting crashed? Or this is something which is happening because the general elections are just around the corner, or the world is losing interest, or what is this? I mean, there's a jitteriness into the minds of investors at large, exactly why all this things are happening, and how this event will turn out to be. So what is your idea about it? A very, populistic question which a lot of viewers would be interested in knowing from you, sir.
So first of all, I'll say that the markets run on every market, whenever they have gone up or there are the corrections. In hindsight, we'll get all the reasons. So what is the right valuation? Whether we are too much overvalued? All answers you get in hindsight. So last year, and I take you a year back, when people were anticipating India's growth, economists, many other institutions put the growth of India, they had to come back and revise upward. I'm repeating, revise upward India's growth GDP numbers. Right? So the markets last year, and this is going back to your first question when I said maybe you will come back and put a question to me in small mid cap. So last year, mid small cap as indices have gone up between 40-50% plus or minus a little bit.
Yeah.
There are few funds, including our own Mahindra Manulife small cap fund, Mahindra Manulife mid cap fund, which are given above benchmark returns 50-67% around that time depending on periods. So sometimes when in a short period this kind of return come, people tend to question, is everything so relevant that or is it overvalued? So refer to my first question that you have said and the answer which I gave. I don't think things happen by chance. Yes, at some pockets, some stocks, there can be speculation, there can be frothiness, there can be little overvaluation. As I talk to you, or and today, and Saviors done a fantastic job in terms of asking every mutual fund who manages small and mid cap to give a stress test and make it public disclosure. It is a fantastic initiative. Because while some people may look at from a very cautious angle, because the word stress itself is very stressful.
True.
But just look, this is to give you a insight to remove your stress.
Correct.
So I'm sure you will upload for your investors' benefit all the stress tests that will come out. You will get a lot of confidence. At least from my fund house angle, I can tell you these things are in our mind also when we manage. When we buy stocks, we buy stocks with liquidity in mind. We buy stock keeping valuations, keeping growth in future growth outlook in our mind, and many other cases which come under our risk management angle.
Wow.
So when we manage money, it is not only giving returns; it is returns versus risk you are taking.
Correct.
So yes, sometimes these things get carried away in news, but I can assure you that the initiatives taken by the regulator are in the interest of the investor. So, and this stress test that you will somehow relate and you will, I'm sure, bring it to the notice of the investors,
correct,
will give them a lot of relief. And the good part, wherever you are uncomfortable, you can take your own view depending on, as per your profiles and you can take a decision. So wonderful initiative. And let me give you a quote. It is said that every past correction was an outstanding time to buy stocks, to buy securities, except for ongoing correction. Can you imagine what the quote is? In hindsight, you can relate to everything.
Yeah.
So if there are corrections, depending upon your profile, your time horizon, your risk profile, I would say take it as an opportunity. Don't be in a hurry, have patience. But these corrections sometimes tend to be a good entry point.
So I think there's a very relevant question, a very trending word which Mr. Singh has to introduce in this answer. What is a stress test? And I'm sure a lot of viewers might be interested in what exactly is the stress test. And Mr. Singh has very simply and very beautifully answered that it is, the parameter or something related to how liquid your asset is and in how many days can you be able to liquidate that asset. That primarily comes under the ambit of stress test, which at this point of time the investors or the viewers are very much interested in knowing, because very soon, very now often we are hearing this word, what exactly is the stress test? The investors are confused about, but Mr. Singh in front of us is very, very, very simply and very easily has answered that why there is a froth, how does that froth gets clubbed down, and then how the stress test come out, and how transparency is being brought up by the regulator, which is working so much in the interest of investors at large. So with this question, Mr. Singh, I would like to ask you a very important question, which the viewers will be very much interested in. How do you think an advisor plays an important role into the life of an investors? Because many a times the investors think that everything is so overly transparent. Everything is available on the internet. They can read any amount of document, any amount of information, and they can take their call by themselves. If that is the question, what is the need of an advisor? Or how do you think an advisor plays an important role into the lives of investors?
Sure, let me start by giving you a couple of analogies. There was a time, whoever learned driving, the first time you went out, I'm sure somebody in your life, your father, or the agent who teaches you to drive, he taught you to put gears. Maybe theoretically you knew the vehicle move ahead. If I put on the accelerator, vehicle move ahead. But to adjust to the gears, to adjust to the speed, braking, initially those directions were taught, and maybe you learned that some few things later. In India, and another example is in India, most people do tend to go to medicine shops sometimes to buy across the counter few things like paracetamol and all that.
Exactly.
But the doctor is still required. The doctor is a specialist. So for some basic work, you can think that maybe I can take care of myself.
Correct.
But there is much more complexity in the capital markets, in the world, than what general investor thinks.
Yeah.
So go back to my first example of driving. Driving is all about both things. Rear mirror drive when you're taking your vehicle back, but major of the time it is always looking ahead and driving. So what the advisor do is they are in discussion with fund houses like us. They're discussion with the specialists in the markets, and they take a view based on many factors on behalf of the investor.
Correct.
And most of the views taken in the future of the world, in the future of the capital market, in the future of the economics, and in the future of the portfolios.
Correct.
So it is not only about returns, it is about so much complexity which goes into. And as they say, horses for courses, which is, it is not that every portfolio is for everybody. Somebody who can't take a risk should take a different portfolios. The advisor will tell. Somebody who can take a higher risk, has a longer time frame to invest, the advisor will handhold. And sometimes portfolios are so complex that advisor will understand better than investor. It is not only because something has given returns is the best for you.
Correct.
Right? So there are many more things which may not be covered in such a short notice time. But all I can tell you that advisor is for life. It's like part of the family. And investor should concentrate more on the business they do or the job they are into it. Concentrate on earning there and consult to an advisor where the savings should be channelized. If you think that you are an expert in your job, if you think that you're running a business, you're an expert out there, then the financial advisor is an expert on various matters of the products where you need to get invested in. Right? There were times when we would talk about India. Today, your questions have ranged from global to US Fed to Europe, and so many asset classes that are available. So all these things can be taken into account only when you're consulting advisor. So that is what I'll say. Yes, advisor zaruri hai.
Wow.
वो आपका साथी है. It's like who can take you ahead, just like what Krishna was to Arjun. The financial advisor is for your money, for your investments.
Mr. Singh has so beautifully answered that while driving, you needed somebody who can help you out in driving. So maybe the advisor might play such a crucial role, an important role in your life, just as Krishna had been to Arjuna. And I think, by quoting this analogy, he has even brought the biggest epic Mahabharata, which has been won by Pandavas just because of Krishna, Lord Krishna, into the picture. And by quoting Lord Krishna's analogy to that of an advisor's, he has very beautifully brought into the limelight of the people as in why an advisor is so important, despite the fact that everybody knows everything about information, the knowledge which is there through Wikipedia, through Google, through blogs, through Instagram, YouTube, Facebook, everything. But still, he would always say that advisors are an important part. So, last but not the least, before we wind up this session, the last message, what you would like to give to the investors who are looking forward to invest their hard-earned money into the markets. What is your view over that?
Sure. So let me put it differently. Long time back, I had read somewhere, and we keep hearing in the life, right time, right place. So what I think is, if you are an investor in India, this is the right place. And because India's growth is expected to be like 10 trillion, 30 trillion, 40 trillion in the next 2.5 decades, because I'm sure you would have heard Viksit Bharat and the numbers around that being $35 trillion economy. You heard things like Amrit Kal, from 75 years to 100 years independence, right? So from a $3 trillion economy, moving to a $30 trillion economy. Take this opportunity, right time, right place. But do not be completely, don't throw caution to the winds. Take advice, have a financial consultant. We have a long way to go on growth. If everything is fine, rankings, third rank, second rank, everything will be only a result of the growth we achieve. So, in the last 75 years, India came close to $3.5 trillion economy. In the next 25 years, if we reach close to 30 trillion, that is like 10x growth.
Yes, correct.
So how can that growth come without corporates and individuals, which is citizens of India, the corporates of India, the agriculture as a segment, the financials as a segment, the services as a segment, the manufacturing as a segment, not contributing. So let the portfolio managers take care of the fact that where to invest, which stock to buy, because there are nitty-gritties only they can take care of. The investor should take the benefit of this Amrit Kal, have discipline, have time on their hand, not be overly invested if their risks do not allow, have some asset allocation, and if what I expect and many people like me expect, then in the end, this will lead to a golden era of wealth creation. So, from first 60 years after independence, we reached $1 trillion. And we are talking about that from next 25 years, which is Amrit Kal, we'll achieve $27 trillion. So the numbers are heavy, and results and benefits should also be in that in that direction only. So I would say, sit back, have patience, have discipline, have time on your hand, involve a financial consultant, and let's enjoy the journey to the destination that we're looking forward to.
Wow. I think he has summed up the entire economy, the investor's psychology, how it should be governed with this answer what he has given. In fact, this is making me to remember a proverb which says, make hay while the sun shines. So what he has told about Amrit Kal Mahotsav, which India is witnessing such a huge exponential growth in GDP figures, because of which, all the participants will get benefited. And I'm sure Sabka Saath, Sabka Vikas will definitely take place. So with this, we would like to bring to an end this discussion with Mr. Singh, who is an expert, the veteran into the mutual fund industry, and I'm sure this program will be way too beneficial for the viewers who are watching this and would definitely be finding it much more interesting, value added, and most importantly, would be appreciating this show at the end. So guys, watch us out for the new video which is coming out soon with MoneyTree Partners. Thank you very much.